Is the Saturday 28th of August, and the chart that I have in front of me is that of the Nifty small cap 100 on set on the monthly time frame. The reason for having this chart in front of me is because after what seems like almost 12 green monthly candlesticks, we have had our first red monthly closing. And this from high to low, that is a high of around 10,650 to a low of around 9,550 is approximately 1,000 points, and that constitutes to around 8% to 9% on the index level at these valuations. So after a series of almost 12 to 14 months of a clean up move, uh, pretty close to its all-time high, the question is, can we look into the prospects of accumulating into the small cap index, given that it is trading pretty close to its all-time highs? So since this is the first time I'm actually going through this chart on YouTube, so to speak, I thought that as a good starting reference, it'll make sense if we look at this chart on a longer time frame, and therefore I set this on a monthly. So we can see that the price data on this site for this index has been since 2005, and in 2005, from these lows of 750, the index by the time in 2007 has made highs of 6,000. This is roughly 8 times 8x move on the index as a whole in less than 3 years. So once again we'll understand, this is a 8x move on the index. I mean, we can do the math, but pretty explosive move of the index in just 3 years. After this 8x move, we reach a phase of 2008 crisis, and the index from the 6,000 levels goes ahead and creates a new low of 1350, losing almost 4,500 points. That is roughly 66%, almost 70% of the index valuations from the highs were lost in a year. So it took it rallied a lot and gave back a lot within a year. Subsequently, this index traded within this very broad range of 1350 to 6000 all the way up till 2017. And in 2017, after a critical test and a confirmation, the index gave its first all-time high breakout. And from the 6,000 levels, the index went and rallied 3,500 points to slightly above 9,500, rallying approximately 50% in a period of less than 1 year. So we can see that once this index reaches a certain critical level, it typically does not give the investor much time to jump in from critical levels. So also we see that the percentage moves are so explosive that this makes it a very, very high beta index of 100 stocks. So it is logical that when you're picking up an index or picking up stocks from this index, you can expect a significantly greater change in percentage in your portfolio as compared to that of having Nifty 50 stocks. Now, from this high of 2018, we see that from 9,600 levels, the index corrects all the way to 3,000 levels, giving away 66% of its valuation once again in a matter of 2 years. These 2 years that it took to give away 66% of its valuation must have been very tough trading wise, because we see a significantly long period of consolidation from the lows at 2018 till right before COVID. And we can see, so if I select this rectangle here, we can see this after the fall, we are seeing a significant period of consolidation around these levels for quite some duration. I'll just mark this with a neutral color. And on extension, this is pretty much at the support level. So right here is the support, the previous high is the support. But once it broke, it really just kept correcting. And after that, the market stabilized, not just here, all over the world. And what happened soon is just history. So the market stabilized and it effortlessly cut through the various resistance points, and seemingly with a full breakout throttle creates a new all-time high, only to receive a first major 10% single month correction last month. And the question is, should we buy into this dip? Now, this gives us an overview of the index at the monthly level, and from the monthly level, despite all of these zigzags, we can safely conclude that this is a highly volatile index and that it is trading at its all-time highs. In fact, it has created an all-time high. And what do we do when an index creates an all-time high? The answer is you buy. Now, where do we buy? We buy it at a pullback. And where should the pullback be? If we are analyzing the trend on a monthly or a weekly time frame, the pullback should come on the daily time frame. And so when we select this on the daily time frames, what we are now seeing is the marking of the same levels, and we can now from our point of reference see that the index has been continuously moving higher highs. This is a very strongly trending index, but the recent pullback is definitely a strongish pullback. And now the question is, should we buy into this inside day candlestick which has been confirmed here? Now, the decision to buy at this particular level based on the confirmation is possible, and if one were to do that, you would buy here with a strict stop loss at these levels, which I'm going to mark in red. So which means that you would have bought because there is an inside day, it's got confirmed, and you are buying because it is a structurally upward moving price chart. So if suppose I see, I just make a broad arrow, so this is sort of the movement of the price point. We are seeing series of higher highs and lower higher lows, and subsequently this is the corrective phase, which I will now mark in black. And since the historic trend has been upwards, the price is trading at its all-time high. This is the first pullback, creating sort of a double bottom here. We are going to buy this because of a confirmation of a green candles of a inside day and a green continuation candlestick that has happened on a Friday with a strict stop loss right below the low of the confirmation of the candle. Because our concern is that if suppose this movement is happening and we are buying, so we are buying because we are at the worst expecting a movement like this. Somewhere around here. So this is somewhat like a price action that we are expecting, but we are expecting that, or because we are buying at this support, we are hoping that the market will respect this lows. If at any point the market were to do something like this, there is no doubt that this support needs to be this level. You will need to react, and now you are concerned that the market might now do something like this. So, because obviously we are here and we do not know what the future is, we can only prepare for the worst. And the preparation for the worst is, if you are buying, the worst is the previous low breaking. This is the worst case scenario that can happen, and because this is a really bad scenario, we want to exit any entry that we make at these levels based on this confirmation around the red line. Now, whether it trades here, which is marked in somewhere around Diwali October time, or it simply fails right away, in both cases we have to leave. So we cannot concretely determine when this will happen, but if this happens, we have to leave. But for now, given that the previous move is entirely upwards, our focus is to buy into this corrective wave, because we are hoping that if this is indeed an uptrend, then in that case the move eventually from this from this will eventually lead to this. Now it could lead from into a more complex formation. It is completely possible, but this is the advantage of taking equities, that you can sit through all of these wave patterns that are happening at around these levels. So which I'll mark here with some other color, say this one. So because we are obviously buying on a pull towards the previous support. Now, before I conclude this, it is obviously reasonable to come up on YouTube on a convenient day and say buy here. We must understand that the trader who was around here, all right. So just to visualize, what is he seeing? Now this I don't know why is this not stopping. All right. So the traders who were trading this time frame at these levels, we of course have the advantage of knowing the future, is that from 10,650 the index has come and made a low of 9,780, and this is clearly a hammer. and this has come after a full week of correction. After the hammer, we have a green closing. After the green closing, we have a gap up opening which closes on the red. And now the question at that point was, would this hammer low defend? Whoever bought would have bought trying to defend this particular hammer low, and it is okay. It is completely justified, because when we know that the index is trending, and if we set up a simple 20-50 moving average, not only do we see the hammer, we are also seeing, sorry, a 50-200 moving average I've set up. Not only do we see the hammer, we are seeing it on the 50-day moving average. It is completely reasonable for traders to have bought into this particular support zone with a stop loss around the lows of the hammer. And as we can see, it eventually got traded only to take a support pretty close to this level. So it's a part of the process. If you bought at 10,000 odd, let's say you bought it at 10,200 odd levels, and you get to exit at 9,700, you lost 500 points in the attempt to buy into a hammer. It is a part of the process. The question now is, if you once again buy around these 9,800 levels with a stop loss of 9,500, you're risking almost the same in terms of percentage, but in absolute points you're risking only 300 points, allowing you to be able to go in with greater quantity. Now the question is, like we discussed, if this low is not respected, we have to exit. So we are already planning for the worst case scenario. The only thing is, what do we do if we are benefiting? And the answer is, we will hold. And the reason why we will hold is because we are seeing all moving averages on the daily time frame, the time frame that we are trading on, trending upwards. And when that happens, we are not incentivized to exit that particular market. So hopefully I have answered the queries that have come up in the past on whether or not this is a good time to invest. The answer is, it is a great time to invest, but it is a particularly interesting time to invest in the small cap index if your horizon of investment is roughly 3 to 12 months. Why 3 to 12 months? Because we are using the daily time frames. We have used the monthly only to infer that this is a structurally upward moving security. We don't want to get caught into some losing security which is recently doing well. We have seen that it is trading at its all-time high, consistent with everything that is happening in the world. It has shown a 10-15% pullback. It gave a minor reaction rally around the 50-day moving average. It has come here. It is likely there are divergences already in a trending market. There is a probability it will hold the inside day. If it doesn't, we will exit. If it holds, then we will buy into this particular range and hope that the index will do what it has traditionally been doing, that is take out the previous high. So I hope this input helps you in some shape or form, and hopefully you will now narrow your watch list to the small cap index at this point, and consider taking positions at this 9,800, approximately 10,000 levels, with a stop loss of 9,500. So yeah, that should be a 5% stop loss at the index level, which will contribute to roughly 8 to 12% stop loss on the a particular stock level, because most likely your stock will have a beta of somewhere between 1.5 to 2.2 times the index. So yeah, so hopefully this is useful. I wish you a good weekend, and take care. Thank you.